Hey, I'm Ali from FX ORDERFLOW channel, and I want to show you guys how I trade S&P 500. Before I jump to technical analysis, let me talk about futures market a few minutes. So we had NFP data on June 6th, and the actual number was 139,000, which is higher than forecast, but the actual expectation for the number was less than 126,000 because of tariff effects. So the job data was really good. The unemployment rate was 4.2 without any change, and the average hourly earning was higher than expectations. So overall data for NFP was really good, which is a good thing for S&P 500 because it shows that labor market and economy is doing well after tariffs, because tariffs were executed on April, and we had like 1 month, 2 months of tariff effects, and still the labor market is good. So it is overall good for S&P 500, and this is S&P 500 chart, and these are 1 hour candles. This is the NFP candle, 1 hour. As you can see, after that the market went up, but there is a thing here. The Friday is the last day of the week, and there's a chance that we make the higher wick for weekly candle. So although the fundamental bias are buys, but there's a chance that the weekly rejects a little bit to form the weekly highs, weekly wicks for the weekly candle. So although we're looking for buys, but there are some sell opportunities here for those traders who want to risk more and their trades are more aggressive. I personally don't like to trade against my bias unless the volumes are really good and the risk to reward ratio is also good. So we should only look for the buys if you're like a safe trader, but there's also sell opportunities. This high is really important for me. I'll explain it for you guys later. This high, it's Thursday high, and as I said, we're looking for buys. And if you want to hold the buys, you probably shouldn't hold it a lot, because as I said, we might form the weekly highs, weekly wicks for the weekly candle. So there's a chance for rejection, and you might not get enough profit in that trade. So let's jump to the main chart. These are 1 minute candles for S&P 500, and these numbers, these numbers on the chart, on the candles, are the sum of buys and sells. For example, if you see the 32 lots here, it means that the sum of buys and sells are 32 here. So if it's some buys and sells, it's going to be 32 here. So the numbers, as you can see, are standard lots for buys and sells. This is a 1 minute candle for NFP. As you jump to the upside, and we had 2 volumes here, and the filters got activated, as you can see here. These highlighted filters are showing a higher amount of orders in a tick. It could be either buys or sells. The red line here indicates that it's sells. So we had a huge amount of sells here on these 2 candles on this exact price. And the market didn't go down. It even rejected higher. If I show you on the other chart here, this is also footprint, but it separates the sells and buys, buy side. The left side is sell, and the buy side, the right side is buys. It shows buyers. So we had 533 lots of sells here and 631 lots of sells here, and the market didn't move down. It even rejected. As you can see on this candle, it even closed above. On this candle also closed above. This is bearish, this is bullish. So it shows that although we had a high amount of sells, we didn't move down. So it shows a market maker here that planting buy limit orders and preventing market to go down. So we had aggressive sells here, but the market didn't go down. And these numbers under the candle and above the candles. The green ones are buy, the red ones are sell. It shows delta. Delta is like if you the difference between buy numbers and sell numbers. It's based on lots. So for example, in this candle, if the delta is 117, it means that we had 117 more buy orders than sell orders. Okay, so for example, on this candle, it means that the buyers were more than sellers, 170 more, and on these two candles are the sellers are more. So these are numbers are delta. So we had a buy opportunity here after the candle moves above. We have even more sells, but the market cannot go down. So even if you don't enter here, after this range breaks, you can enter and put your stop loss down below. It's the stop is a little bit wide for me, and also I wouldn't trade before NYSE open, which is a 5 o'clock for me on my local time. So I wouldn't take any trades here and I would wait for NYSE open. When the NYSE open happens, we have a really interesting candle here. It's a block sell because the delta is negative, and it's quite negative a lot. It is quite negative. So we had really high amount of orders here, and most of them were sells. So we had absorption of sellers. Sellers tried to really hard to go down. They couldn't go down a little bit. The way to enter a trade here is to wait for the buyers. So wait for the buyers to cross this block, and as you can see, this huge amount of orders at 1,000, more than 1,000 orders of buys. I tell you guys again, this is the difference between buyers and sellers. It doesn't mean that we have 1,000 buyers. We had almost 4,000 buyers and almost 2,500 sellers here. So the difference here is that the buyers are more. So we close above the block. The way to enter here is that you can enter right away after you see this amount of buys, and after it closes above the block, or you can put your buy limit order on the edge of the block or inside the volumes. We had a good retest almost to the middle part of the volumes on the block. So it's up to you guys. Sometimes if you put your limit order, you might lose the position and it doesn't like activate your position. So I personally, if I see a block on my area, I would definitely enter the trade right after the buyers enter the market. Sometimes I don't even wait for the candle to close above. Once I see a huge amount of buys on the middle of the candle, I would enter sometimes. So if you would enter aggressively, your stop loss would be like to have some distance below the block. It would be 8 pips, but I think if you put your limit order on the edge, it would be almost 6 pip, or if you want to risk more, and like when I say risk more, it means that you risk of losing the position. It would be like 5 pip if you would put your limit order on the like a little bit inside the volumes. It would be 5 pip, which is a really good stop loss for S&P. So this one here, this trade, as you can see, was successful, and it was a like short trade for scalpers, but because the reason that it's a scalp trade is that I don't want to put my after this line, I don't want to hold my trade anymore. This line is exactly this high that I told you, Thursday highs. Why I want to close my buy trades after the Thursday high? The reason is that, as you can see here, let me show you the other chart. The area of your entry on this chart, if you enter like here, would be around here. Would be around here on 1 hour candle. These are one hour candles. So you would enter here, and you would just hold it until here. So it's not a really huge risk to reward ratio. So I personally wouldn't take this trade. I don't like a scalp trades, but for scalpers, it's a good trade here. What I'm looking for here are for sells after we hit this high. The reason is that, let me put away this chart here. Okay. So we had an open cycle here. What is open cycle? As you can see, the daily candle on this opens here and we close bearish here. This is Thursday, a day before Friday. And this is Monday. I'm recording this video on Monday, so don't like look at this part of chart. We're talking about Fridays. So we had a cycle here. The delta, overall delta of the day was almost 4,600, almost 4,600, and we closed bearish. This is the daily open. This is the close down here. The exact close price is here, but it doesn't matter. The daily candle was bearish, but the delta was positive. It means that a market maker was trying to push the market down, and there was some aggressive buyers keep buying. So they are in loss right now if they hold their positions. So what happens now is that there's going to be a lot of stop losses above here, and the buyer is in loss. So usually, I'm not saying every time this happens, usually on the next day or a few days after that, market tries to cross this cycle and closes this cycle. And also it hunts this stop losses above here and activates his orders here. So this usually happens like 60 to 70% of the times. I'm not saying exactly the next day, but like at least a few days after it might happen. As you can see, we had an old cycle here, and we had a big one. It's a weekly cycle here right before, and it closed like 1, 2, 3, 4, 5 days after. On Thursday we had a cycle, and the Thursday also made another cycle for the next day. So this cycle is much stronger because the delta is like 13,000, almost 13,000. So we closed it on Thursday, and then the market moved down. So we had another cycle here, and it's Friday. We might have the weekly. We might have a weekly candle. So after that, I'm looking for a sell, but it's risky because the fundamental bias is for buy, and we're looking for a sell. So basically, it's against the trend. So if you want to take this trade, you should risk less. For example, if you're risking 1% on your trades, for this trade, you should take like 0.5%, maybe even less. Oh, and do not risk a lot on the scalp trades. They are really risky, and the risk reward ratio is not good. So let's see the market activity after we close the cycle up here. Oh, and one more mention. The market was going up straight from the morning. So if you're selling here, basically you're getting the correction and you're entering on the top. So the risk reward ratio is not that bad. I think we can get the risk reward of 4 or maybe even 5 if we're lucky. So let's see the market activity. Let me put the chart on my other monitor. So after this line, the cycle is closed. But the way I look at it, I'm looking for big trades, because for me, big trades are signs for hitting the stop losses. So if you see a big trade in a certain places on chart, it might be a stop losses, and I'm looking for a stop losses to trigger. And what is big trade? Big trade is basically high amount of orders. It doesn't need to be high, but there's a minimum orders for that. That activates in less than 10 milliseconds. You can put the millisecond higher or lower, it's up to you, but I like to put it on 10 milliseconds. So it's a really tiny amount of time, and a lot of orders will activate it with the really highest bid, okay? So the first time that I see a big trade, I'll wait for the seller to enter the trade so I can sell. So as you can see on this candle, we see the big trade. We also have a buy absorption here. Look at the highlighted area. Look at it. It's absorption. So it's a perfect candle for me to enter. Okay, but there's a tiny problem here. This is an unfinished auction. And when this happens, when this pops up on your candle, there is a high chance that 1 minute will make a new high. As you can see, we saw it here. We made a new high, we saw it again, we made a new high, we saw it again, we made a new high, and again here. But if you're pretty much certain on your trade, you can enter, but you should put your stop loss a little bit wider. I like to, on S&P 500, I like to put it like 10 pips. If I see that, it's my maximum stop loss. If a trade is like more than 10 pips, I wouldn't take it. So if you would enter after this candle right here, why I enter right here? I see the sellers comes in this on the next candle. As you can see, it enters here. You can enter right here. You don't need to wait for the candle closure, but if you wait for the candle to close it, it's much safer. Sometimes I wait for it, sometimes I don't. It depends on the position. If I'm really sure on my area and I'm really sure from the volumes, I usually don't even wait for the candles to close. I just wait for the seller, a good seller to enter the trade. And also I look at the market speed up for the sellers. If it goes, if it has like a really fast jump, I would sell here. So you can enter on this candle, but there's another problem here. As you can see, we had a huge amount of sales here, but they've been absorbed here. If I show you the 1 minute chart for that, would be here. As you can see here, this is the same area. Here, we had good amount of sellers, but the market didn't go down. We even had absorption. It means that a passive buyer want to try to push market higher. We also had this unfinished auction. So if I would enter this trade, I would immediately close my sell position and wait for this high to go, to wait for the market to make a new high on 1 minute chart. Because I had this absorption. If I wouldn't have this absorption, I would keep my trade because my stop loss is pretty much big. So I'm not concerned about it. As you can see here, even if you wouldn't close your trade, your stop loss wouldn't get hit. You had like 3 more pips till you had stop loss, and you also should consider your spread on your chart, because I also trade on CFD. I don't trade on futures. I just use a chart. You guys are probably trading on CFD on MT5, so you might have a huge amount of spreads, but depending on your broker, you might have less spread. My spread is not that high, but it's like half a pip, which is not high. It's really good for S&P. So I would immediately close my trade on a probably a 1 pip loss, maybe even less than 1 pip, which is not a lot. It's good. I would wait for it to go higher, or you can risk and keep your trade because your stop loss is really huge. And if you're pretty sure about your cycle, yes, you can hold it. So as you can see, we went higher and then boom, here, look at it. We had 2 big trades. One of them is really huge, 500 lots. And we also had a trade size. Trade size means that with 1 order, you activate like huge amount of lots in just 1 order. So a guy here activated 499 buys with just 1 click. Okay. Usually these are like AI, it's not human. And also this volume, this 499 is definitely not human, because the limit, the maximum size that a retail trader can enter in futures market for S&P, I think if I'm not mistaken, is 50 lots. I'm definitely sure that it's not more than 100 lots. So I'm 100% sure that this volume, it does not belong to a retail trader, okay, which is good. So somebody tried to push the market higher, and a lot of stop losses was activated here, and the market didn't go higher. As you can see, we have a huge amount of absorption here and a buy block here. The market even closed below the volumes on the block. So it means that a really huge market maker has been placing a lot of sell limit orders here. So I'm definitely looking for sales now, and I wait for a seller to enter the market. So the next candle also, there's a lot of buyers, and we have 1 more absorption, and then boom, a huge seller enters the game. This big trade here is not a stop loss. This is just high amount of orders to push the market down, and they would succeeded in that. We also had a trade size here. So you can enter on the close. You can enter when the market like pushes down with a really huge amount of sells. It's up to you. You can also wait for it to just have it like a little bit of space from the block and then put your sell limit on the edge of the block, or even more if you want to like risk more like inside on the volumes. But as you can see, if you would put it here, it wouldn't be activated. So it's up to you, the entry. It's based on your personality, the way you want to like enter aggressive or not. And also it depends on the position. So as you can see, the market just dumped down and it came up again here for another retest, and then it dumped down really good. You would have a really good trade here with high risk reward. It's probably let me check. If you would enter here, it's around here. So on this trade you could get 35 pips with, let me check the stop loss. So there's no unfinished auction here, so you can put your stop loss a little bit lower. If you put it here, it's like 7 pips. So with a 7 pips, you get 35. It's the risk reward here is 5. I would close it on 30 pips. And I'll tell you guys the reason. First of all, we're getting the correct correction, so you shouldn't raise your expectation for a lot of profits. So the market, as you can see, we entered here on the top of that. Here is your entry, and we came down pretty good. So let's see what happens down there, and if we see any buy positions, because our main positions here are for buys. So let me come down here. Okay, so this is my value area, this line. I'm looking for buys here. Why? For Thursday, the value area is between this line and this line. And if you consider the NYSE value area is here. So this area here, 68% of Thursday's volume are in this area. And the edges, these two, are important to me, especially the NYSE edges, because most of the volumes on S&P 500 is after NYSE open. So when the market comes here, look at it. Look at the reaction. Look at the rejection to the upside. It's really huge. The first candle here, look at it. Look at the rejection to this. It's a lot of rejection. Let me measure that. It's a 12 pip rejection. Then we come again, making a new low, and then the next candle retest the lows and then go highs. Okay, let's see what happens in 1 minute. So we had two important areas here, and this is the average, this is the VWAP, and it shows the average volume. This is 30-minute chart. The average volume from here to here, exactly this bullish candle. The average volume line is here. So this is a really good place for the correction for the market to just correct and then go up, make a new high. You can also use Fibonacci. It's probably close to 50% here. Maybe less than 50%, but it's a good place. I honestly don't use Fibonacci a lot, but this VWAP is much more important for me. And this is based on volume. It's not based on movement, okay? It's based on volume. And this volume is futures volume. It doesn't matter that which broker you are. The data is coming directly from CME. It's not like CFD volumes, which is different for every broker. It's not like that. It's futures volume. The market makers are trading on this market, futures market, not CFD market. So as you can see here, we had 4 sell absorptions and then the buyer enters here. It's a weak buyer. You can wait a little bit more for a more aggressive buyer and more stronger buyer. You can see here almost 1300 lots of buy difference. So you can enter on this candle. Once you see after this buyer, you might want to wait a little bit for another stronger buyer, and you don't need for this candle to close. You can just, when you see crossing here, you're probably going to see a lot of buys. You can just enter right on the middle of this candle. You don't need for it to close this. If you put the stop loss down here, it's going to be almost 10 pips. Yeah, it's going to be a 10 pip stop loss. It's a little bit high, but 10 pip is my maximum stop loss, and it's good here. So after, as you can see, we made it up to we made it till here, and then came back. If I put a line down here, we came back all the way and made a new low. We almost hit it, the average line that I told you. As you can see here, once we see the volume, we might not like actually hit this line. There's a chance we might not hit it, and there's a chance that we hit it. So after you get like 12 pips, if you put your stop loss on break even, I usually close 50% of my trade on risk reward of 1-to-1. So even if it hits my stop loss, I don't lose anything, but your stop loss would be definitely hit if you keep it. So for me, if I would enter here, I wouldn't lose any money because I would close 50% of my trade on 1-to-1. So once you make the high, you make the new low, it's like this candle. You see these two candles that rejected. The first one rejected, and then the second one made a new low. This is exactly the same thing on 1 minute. You made a new low, and you made a new low, and you almost touched the average VWAP, the VWAP here. So we had a good absorption here. Let me show you my other chart for footprint. It's down here. You made a good absorption here, and then the buyers entered the market. Then the buyers entered on the next candle. It's a good amount of buys. You can enter right away here on candle close, or like on the middle part if you see a lot of buyers or in the market is bid for buys. So it's up to you again. You can also wait for a retest here. We got the retest here, as you can see. If you don't want to be risky here, you can wait a little bit to get some space, and then put your limit order a few ticks above the absorption area. As you can see, would enter right here with your limit order, or you could just enter aggressively. The stop loss here would not be a lot. If you enter like around here, it would be like 7 pips. You could put like 8 just in case. And then the market goes up, and it was like really good trades on Friday. I rarely trade on Fridays, and this Friday I didn't take any trade. Is because we had NFP. Even after NFP, I wouldn't take any trade after NFP because for me, Fridays doesn't work properly. Usually, we might make the week for a weekly candle, the week for the candle, weekly candle, or the market might go in range, or a lot of like huge institutional traders, they close their orders when we wait for the new week for Monday. So it's really risky for me for Fridays, and they rarely are good. This Friday was really good, really good. We had 3 good opportunities for positions. It was really good this Friday, but I didn't take any trades. I didn't even watch the market. I'm watching it right now on Monday, but it was really good. It was really good, but it's not like every Friday is like that. So sometimes I trade on Fridays, but it rarely happens for me. If you enjoyed the video, please like and subscribe. See you guys on the next video.